Everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. It is Saturday, March 24th, and we're going to be looking at what happened on Friday the 23rd and kind of putting the entire week in perspective. This is the week-ending video that is for everyone to view as soon as it is posted. And I just want to remind you that the Monday, Tuesday, Wednesday, and Thursday videos are released to subscribers only on the day that they're produced. Everybody else gets to see those on a delayed basis. So if you are a subscriber, you're getting those on a timely basis. And if you're not, you're getting to see these videos either on a 1 or 2 day delay. So I just want to ask you to think about subscribing, because I think we're doing pretty well with this form of analysis. But as well as we're doing, I still have to tell you that the website and the video are just for educational purposes. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you have to make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Now, before we get started, I want to say something about investment psychology, and you probably know this already, but I want to share it just the same because it's something that I have found in my own life to be very, very true. And that is, you've heard the old adage, don't invest money you can't afford to lose. And the reason isn't because people say, don't invest money that... Well, let's put it this way. The reason people say that isn't because they think you're going to lose it all. Is that statement has its basis in psychology. And what it says is, if you invest money that you feel like you have to protect, if you invest money that you feel you can't back up more than 1 or 2% before you start feeling that you've made a mistake and you start have a feeling of regret, then don't invest anything. Because if your pain level is just a few percent underneath what your account balance is, then you will consistently lose money in that account. Why? Because you cannot pick bottoms absolutely every single time after time. So what will happen is you'll buy a stock and it's trading at $20 a share and you think this is a good entry, and then it backs up to $18.70 and you go, oh God, I made a mistake, and you'll sell it. Rather than the person who buys it at $20 a share and he says, whatever. He can give it a little bit more of a leash. So therefore what happens? Well, the person who can give it a little bit more leeway it doesn't panic as quickly, and he's more likely to reap the benefits of that trade. And I've seen this happen in my own life. I have gone back over the years, and I've seen stocks that I bought for $24 a share that I sold when they got to 21, thinking I'd screwed up and I'd made a big mistake. And I look at how those stocks are now trading in the 80s. So you see where I'm going with this. So I just want to encourage you to consider what your pain level is. Consider what your tolerance is for loss. And one way to deal with that is to hedge. And a good way to hedge, to be honest with you, and it's not like you're hedging for the market to back up. It's in the strict sense. But what you're doing is, I've heard it said, and I thought it was kind of stupid when I heard it. Somebody said cash is a good hedge. Well, it's not really a hedge against the market moving against you, but it is a hedge against your head moving against you. So if you have $200,000 and you want to make some money, but you don't really want to risk much, well, then don't invest at all. Put $50,000 to work. Put $60,000 to work. You see what I'm saying? Anyway, it's all common sense, but it's still true nonetheless. So, looking at the S&P, For this week, we came into Monday with the realization that the market had made this move over this something of a sort of a neckline here that happened in early March in what is sort of a inverse head and shoulders pattern. See it right here. Okay, it's not a real perfectly formed pattern, but we pointed it out. And once it got over that neckline, we realized that there was a target of around 1400 to 1410. It actually measures exactly to 1408, and we pointed that out. Now, once we broke out over that, the market then proceeded to go up to 1412. So we saw this pattern come to fruition. Coming into the week, we had identified this red line, and this red line was identified as, if this line breaks, this is likely the sign that the market will then start to back up for a while. And on Monday, the market had a strong up day, but then started to back up late in the day, and then on Tuesday the 20th, that line clearly broke. Then we identified a little head and shoulders top, even though it's kind of a not that well formed of a pattern. That broke down on the 22nd. We measured our minimum target from that point of the breakdown, and that measured to, let me get my little tool here. Wrong tool. Why is this not working? There we go. That target measured to about 1386, and on Friday, the market, the S&P came down to 1386. Now the question is, does that mean just like this pattern down here reached its target, then came back down, does that mean this is as far down as it's coming? Not necessarily, possibly. I tend to think that we still need a little bit more of a corrective move, and I tend to think that we need to come down to at least the 1370s. But far be it from me to tell you that I've got any strong reason to believe that, other than these levels just haven't really been back tested yet. So I can't point to this little head and shoulders top and say, well, it hasn't made its target because the target is 1374. I can't say that because it has made its target. But we were looking for some sign maybe of when we might get an indication that the S&P is ready to turn back up. And so what I would offer for that, at least as of the close on Friday the 23rd, I would offer this little trend line right here. And basically I would say we'll make it dark blue. Since we got a peak here and a peak there, I would think that it's pretty reasonable to say that a break over this blue line is likely a sign that this 4 to 5 day little downtrend may have reversed and the markets want to now go back up. So, as I was saying before the phone rang, I'm looking at this line right here as indication that this little corrective move is nearing being over. And until we get above this line, I would expect this line to serve as resistance. We've got two touches, 2 days apart. And then we have this little rally late day on the 23rd that failed to get up to that level and already looks like it may be getting perhaps a little weak. But, you know, it was a Friday afternoon. I wouldn't want to read too much into that. So if this all plays out, then it could be that in retrospect, this whole little pattern, however long it's going to take, may end up behaving something like a bull flag. So let's just keep our eyes on this right here. If we look on a 5-minute chart, you can also see this little pattern that we were looking at, and we didn't know whether this was going to be a bearish pattern or a bullish one. And it turned out that that the rally, that very weak rally that started the day on the 23rd, came up to this line, then sold back a little bit underneath it, but then the markets recovered and got back over this. So having met this minimum target here, you can see that that is just dead on accurate. That's crazy. But look at it. There's our line, there's our target line, and there's the low on Friday. Okay? Is someone sitting in a control center somewhere saying, look, let's measure this little head and shoulders? As soon as the market hits 1386.87 on the 23rd, buy. It sure looks like somebody did that, but whatever the reason, once that hit and then we started to head back up, we did not really have any more chart reasoning to say we expect more downside. But if I back off just a bit from this, I still think we need to test some of these levels down around in the lower 1380s or even the 1370s, and if that test gets put off for a few weeks, then maybe even test this green line right here. Where do we get that green line? We get that green line coming off of the lows of October, early October, and then again the lows of late November, and that also sort of lines up with some lows that happened in a little bit past mid-December. So this is all real interesting to look at. As I look at a lot of charts of individual stocks, I'll be honest with you, I'm not seeing a lot of warning signs in these individual stocks. I see a bunch of inverted head and shoulders patterns that have really not even come close to reaching their targets. I see that in some small caps, some micro caps. I see it in some of the big Dow stocks. So I just don't think there's a ton of downside here, guys. And the market would, let's put it this way, the market would have to show me something of serious consequence. In other words, if we sell off 100 points from where we are now, then I'm willing to say, yeah, this is looking like a busted market. But for right now, there is all kinds of rationale to see various levels of support under the market and not a whole bunch of strong resistance above the market until we were to get up into the 1500s. So that's just the way it looks to me right now. So, hey, thanks for watching the video and taking time out of your day. Like I said, if you are already a subscriber, thank you for being a subscriber. If you're not, hey, it's $19.95 a month. That's not a lot of money. And I think you'll learn something from it. If not, don't spend the money. If you don't think this is any good, don't do it. But if you think it could be useful to you, consider it. Finally, I am considering a new facet to the subscription portion of SP500chart.com, and I'm doing it with fear and trepidation. But I think I tell you what, I'll just make the announcement next week if I do this. I will make up my mind, yay or nay, over the weekend, and I'll let you know next week. So forget I brought it up. Look, take care. Thanks for watching.